South Africa's economic growth exceeded expectation, rising by 0.5% in the first quarter of 2026 from 0.4% in the last quarter of 2025. The latest data released by Statistics South Africa shows that gross domestic product was supported by increased output in the agriculture, finance, trade, transport and the mining sectors, which contributed positively to the economy in the first quarter of the year. While growth remains too low to create employment, the country has recorded 6 consecutive quarters of growth. For more on this, we now bring in Independent Economist John Loos. Good afternoon to you, John. What does the latest figures tell us about the economy in the country, given that it is the 6th consecutive quarter of growth?
I think a lot of it reflects, yes, agriculture obviously is not influenced by interest rates. That follows weather patterns and other factors, and that did quite well. That's a smallish sector, however. The bigger sectors that are influential just because of their size are finance, real estate, business services sector, and then, of course, the retail and wholesale trade, catering and accommodation. That's a mouthful. But those were the next best contributors. Those are big sectors. And I think a lot of it has to do with interest rate cutting through last year, or from 2024, mild interest rate cutting, which just helped the economy to higher economic growth rates. The whole environment was better. But I think what we need to caution against is going forward, expecting too much, because remember, this is the first quarter GDP. Inflation was still low. Interest rates hadn't started rising yet. And the whole scenario changed with the onset of the Gulf, the conflict around Iran. Oil prices up, petrol prices started to rise more noticeably in early April. And of course, we know we've got our first interest rate hike now. That was not expected at the beginning of the year, but the environment's changed. So I don't think this accelerated economic growth in the first quarter is necessarily a sign of things to come.
Yeah, somebody might be saying, well, it sounds like positive news, but what will it do for me? Will it create an employment opportunity for me and all of that? I mean, in the past, you remember, we were told that at some point we had such a growing economy, but some characterized it as a jobless growth. But, you know, this positive news, to what extent does it really put bread on South Africans who are watching us talking about this issue as we speak?
It's not a wonderful improvement. I mean, if we look at last year's growth, it improved from 2024 was 0.5, last year was 1.1. This is 1.9 year on year. In other words, compared with the same quarter a year ago. So it's better. But I think to really make an impact, a more noticeably positive impact on employment, you probably need to be looking at 3% plus economic growth at least, preferably 4 or 5. We're probably some way away from that, but I think the positive news, longer term news, lies more in certain structural reforms which are taking place. We know that electricity supply has improved dramatically since a few years ago, and we know that there's a lot of work being done on the transport and logistics sector around the harbours and the railways and so on, the freight railways. So government is starting to put in place structural reforms, starting to focus on the condition of municipalities. So those are the encouraging signs which can have a bigger impact. But that's a longer term impact. Right now, we're dealing with interest rate hiking, an oil price surge, petrol prices that are high. So we've got a short term challenge, but I think we're going in the right direction policy-wise in the longer run.
And the sectors that have contributed to this particular growth, what are they doing right?
Well, a lot of it is cyclical. I mean, when you take wholesale and retail trade, for instance, they've probably benefited from the interest rate cutting. I think the sector where the reforms are coming is the electricity sector. Its output hasn't been wonderful, but I think that's also because we're finding alternatives. Households are putting in alternative solutions. We know that the private sector, independent power producers have come to the party as well. I think we're getting more energy efficient as well in that regard because of the cost of electricity. So that helps. So all around, I think we're improving in terms of our usage of electricity and efficiency. And then, yes, we know that Eskom has dramatically improved as well. That's those repair jobs on the state power supplier are well documented. So that's where the big fixing has come. But for the rest, I think it's largely just cyclical factors. The one sector which is a concern is manufacturing. Minus 0.8% quarter on quarter, so it didn't contribute to positively to growth. And this is a big sector which needs some work. It has had challenges. We know that the vehicle sector is under pressure from imports, cheap imports. We know that there's been tariff wars last year. So our manufacturing sector does need some attention because it is a major sector.
Yeah, I mean, it's not the first time the issue of the manufacturing sector is raising concerns. I think in the last quarter as well, it was still an issue. As and when the signs come up, are we as a country responding, or do we bury our heads in the sand hoping for a better outcome in the next quarter?
Well, I think there's a lot of hopeful thinking, but we're probably not responding fast enough. Certain industries I've pointed out are getting the structural reforms, and they can positively impact on manufacturing. For instance, railways, for instance, harbours, and of course electricity supply. So those are the positive structural reforms. Are they enough? No, not yet. I think a big area of concern is the condition of many municipalities. That also contributes negatively or positively, in a sense at the moment. A lot of them are a drag on economic growth. Services in municipalities have to function well. Infrastructure has to be top class. That's not the case in many. So that's where a lot of reform is needed. Those aren't industrial sectors as such. Those are regions more that need to be focused on. We know Gauteng's under the microscope, but the broader region around Gauteng needs a lot of attention. Many of the towns are in poor condition and haven't contributed positively to the economy. So lots to do.
The data also shows that government consumption boosted growth. However, private sector investment underperformed, with gross fixed capital formation declining by 1.1%. Your thoughts on this?
Yeah, this is a long-term structural issue. Ideally what we want, I think we want, is for government consumption expenditure to decline, because the budget has to be rebalanced. There's very low levels of capital expenditure in the public sector on an ongoing basis. This has been for a few decades. It's been too low. So we're living on 1960s and 1970s infrastructure in many cases. That needs to be dramatically changed. So gross fixed capital formation overall, private sector and public sector, is just over 13% of GDP. We probably need it to be up in the 20-something% of GDP at a guess. And the drag on fixed investment is more the public sector side. So that's an ongoing problem. And yes, in the quarter, after two prior quarters of growth in fixed capital formation, in the first quarter there was a minus 1.1%. So ideally, you want to see a lot more fixed capital formation and probably a decline in government consumption expenditure, not the other way around.
Yeah, just before I let you go quickly there, John, I mean, the economic situation in this country for an ordinary South African like myself is a very confusing canvas. On one point, you are telling us about this positive news. On the other, we are told that inflation has gone up, interest rates have not gone down. And so this mixture of all of these news coming to us intermittently, quarter to quarter, how should we really understand it? How should I be hopeful that the future is bright, or should I take it as it comes?
I think we've got to look at long-term structural measures. I've been talking about that. That's the fixing of electricity, the fixing of infrastructure, getting one day towards higher capital formation, fixing the state of municipalities and so on. Those are long-term measures that can ultimately lead to significantly better economic growth in the long term. And cautiously optimistic that policymakers are turning the corner and we're going in the right direction there. But you're not going to see that the impacts of that necessarily tomorrow or next month or next quarter. The short term is driven by inflation and interest rates, for instance, and global factors such as oil prices and petrol prices that have gone up. That's not a wonderful picture at the moment. That's a short-term cycle. But I think we will see this conflict in Iran come to a conclusion fairly soon. And I think and oil prices go down and petrol prices come off and interest rate hiking, perhaps one more interest rate hike, and then I think we'll stop. That's my expectation. And why I think it's a short-term sort of negative environment which will pass is because the US, I think, is desperate to get out of this conflict because they have midterm elections coming at the end of the year, and cost of living in the US is a big campaign issue. And it's not going well for the Republicans in that regard now. So I think that they will extract themselves from this conflict fairly soon. That's my best guess. It's difficult to predict, but and petrol prices will come off. Those are the short-term issues.
Yeah, well, I'm sticking to hope, John. Thank you so much. John Loos is an independent economist.